Good evening, everybody. Thank you for joining me. I'm Stephen Englander. I'm your host. It's been an interesting day. Apart from it being absolutely freezing, we've been spending quite a lot of time setting up today. And what was quite funny, we spent all this time getting me in the right position and getting the lights just right, and then we suddenly realised about 20 minutes ago that we hadn't set the camera up. So you know, but it's all ready now. Anyway, I don't know why I focus on the absurd and the silly. I suppose it stops me topping myself, but there we go. Tonight we'll be looking at, I'll be chatting about repurposing business premises and what I think about that, Bitcoin, diamonds, stocks and shares, and what's all this about with a new 2% online sales tax. I will assure you that there'll be no cats on the programme though, and you know, so you don't need to worry about meowing and that, whether I'm a judge or a solicitor or not. There's no cats on the show. There's been a few dogs around, but you know, that's different. Just another thing that's happened to us this week in regard to staff. You know, I'm always on about inefficient people and the cost of things. Well, in my own offices, we now have what we've referred to as toilet gate. In that we took on a new member of staff to do some light social media work for us and a little bit of sales and that type of thing. And after disappearing to the toilet for 40 minutes, they were sacked, and we found out that they were disappearing to the toilet to go and watch the cricket on their phones. And we thought, if they're doing that and they'd only been with us a few days, it's time to say goodbye. But I was just wondering, what is your opinion on what's the tolerance level on employing somebody? When do you finally take action? Do you give them a chance and another chance and warnings and warnings, or do you just say, you know what, you've turned up late, it's your first day, you know, not a good precedence. So it'd be interesting to hear the experiences that other people have. And I mean, personally, I would have given the guy a warning, and you know, but you know, the management here decided that no, I'm not putting up with that. So you know, what would you put up with? You know, someone sitting on the toilet all day watching the cricket, or what? You know, I don't know. It's funny. It's not funny really. But anyway, looking at the business news today, talking about funny, KPMG. That's a very, very big firm of accountants. International firm, massive, and apparently a gentleman called Bill Michael, who is the UK chairman of KPMG, has stepped down in his position after telling people to stop moaning about the work conditions. You know, I can only imagine what that could be, but most offices and most like accountants, lawyers, that type of thing, they tend to have coffee on tap and quite comfy chairs, and that they're not exactly living in hardships. I can only imagine what Snowflake was moaning about. Maybe I shouldn't comment, but you know me, you know, it's just how you work in an accountant's office. What is there to moan about except for other accountants? Maybe that's what it was. Not the most interesting people to talk to, but Trustpilot. Here's a thing that I've moaned about before, where I find that all these online review sites that you go and review someone's business are very, very open to abuse. So you can go on and you can have a vendetta against people, against companies. You can be in a bad mood and take terrible reviews. I mean, I've got to the point with online reviews that I only read them for humour. I don't actually take them serious. I mean, if you've got nothing nice to say, don't say anything. Why put people's business in jeopardy just because you didn't have a great experience? There's other channels to go through. Go to the management, complain. You know, my experience of complaining to most businesses that I've dealt with, whether it's a hotel or a restaurant, if you make a complaint, or you don't have to scream at them, but they usually do something about it, because most people do take pride in their businesses. How do you feel if someone complains about the service or product you've given? You might not want to hear it, but you're not going to stand there screaming at the client. You're going to maybe do something about it or apologise. I mean, there's always those awkward people, those horrible people that you just don't want them near you again, and they're the ones that leave these types of complaints. And it's interesting that in the news, there's a man left a negative review of a legal firm, and he was actually sued for what he said, and he got fined £25,000. Now, I've not had great experience with legal people and lawyers in general, but that's the nature of the business they're in. But if you're gonna say nasty things about people, I suppose maybe someone that knows the law and how it works isn't the best person to start with. So I'm not pleased that they got £25,000 in libel damages. That sounds a bit steep. But I think a lesson needs to go out there to tell people to stop slagging everybody off. It's their livelihood. You're not just putting the owners of the business at risk, you're putting the staff as well. You're putting everybody, just stop it. Don't air your dirty laundry in public. So that's what I've said about that. That's my whinge about that today. Bitcoin. What I don't know what you think of Bitcoin, but this seems to be constantly doing well. It's a little bit up and down. I mean, I was talking to one of our guys before, and he said he put bought £20 worth of Bitcoin the other day, and it dropped. Now it's gone up a bit. So on £20 is 70 pence ahead, but it might go down again. People do say to me, and it's a thing all the time. It's like how good is Bitcoin? Should I invest in Bitcoin? And I say to people, I just don't know, because I don't really know much about Bitcoin. It doesn't interest me. What interests me in Bitcoin is the blockchain, which is like a ledger system. And I think the blockchain has great value for the future of accounting and law and ownership of property and everything else. But Bitcoin, I'm not even sure if it's a real currency. There's something very artificial about it that makes me uncomfortable and makes me not really want to get involved with it. I think it's just like buying stocks and shares. I know Elon Musk. And I know he likes it, so everybody else jumps in on the bandwagon. And that's the thing with things like Bitcoin. It's a thing like diamonds. I mean, it's I don't know if you know, but my grandfather was a diamond cutter, and diamonds are a very artificial market. There's probably a lot more diamonds in the world than people realise, but companies like De Beers keep the price, keep a restriction on what diamonds are available in the marketplace, so it keeps the value high all the time. It's not like a normal commodity where they fluctuate depending on supply and demand. It's an artificial one. And I've always been very nervous about diamonds, especially when you go fishing with them and meet certain types of girls. But no, I've always found that diamonds, I've always been worried about investing in things like diamonds, because you feel that because it's a man-made sort of like market, it's artificial, then it's going to crash. But ever since I was a kid, I've seen the diamond market just increase in value, and Bitcoin's a bit like that as well. And in many ways, stocks and shares are very similar, because they sort of go up and down. But I've often looked at accounts of some PLC companies, and I'm thinking, why are the shares less valuable than the share of that one? Because the balance sheet and the profit and loss account showing quite a good, strong company there, but the shares don't seem to be very valuable, not compared to that company, which seems to be making a loss. So accountants don't always make great investors. And the reason for that is because we're looking at the things that matter. How much profit per widget, how many widgets are sold, what's the demand for that product. But a lot of shares, and I know you're not buying shares in Bitcoin or diamonds, but they seem to follow what people perceive the market's going to be. They sort of say, well, I think everybody jumps in to buying a certain shares in a company, and the share value goes up. And that's a little bit about how the stock market works, and it's how these investments work. It's all about who wants them, and not so much about the profitability of the company. And the reason for that is because a good, strong, profitable company will give dividends year in, year out. So what you're doing is you invest £10,000 and you get £1,000 a year back. But you're not going to make any big money. Big money comes because you've managed to beat the market. Beating the market just means that you've done better than basically the market expected to do. And generally that's because there's been some sort of artificial event, or it's like we mentioned last week about what was it, the Robin Hood thing with GameStop, and it's because everybody jumped in and started buying the shares, so the value of the shares go up, but it doesn't mean, say, the company and the profitability goes up. I mean, one can help the other, but do you see what I'm getting at? Buying investments in the stock market and in things like Bitcoin are more about people thinking the value is going to go up rather than the actual company being strong. And it's open to market manipulations, which I've never liked. But, if you're attuned to it, you can predict these things and catch on very quickly, and you can make money. But I wouldn't recommend it. So I've mentioned, as I promised, the diamond bit. Now I'm going to look at the 2% online sales tax, and I think that it's not an awful thing to do. Online businesses don't have the cost of bricks and mortar businesses. So something should be done to equalise a little bit. But I don't really believe that, because I think there's so many other ways that things could be equalised a bit. I mean, a big problem for shopkeepers and bricks and mortar businesses are the fact that they've got they've got business rates, they've got rent, they've got all these types of things. But they've also got community services like the dustbin men and water supplies and all these facilities. But then again, even people that are online have storage. Some of them do work from their own shops. Some of them, they have sometimes just as many other expenses than a retail-based or a bricks-and-mortar base. Like, they've got a lot more delivery costs. They've got a lot more returns coming through the door because people buy online, things don't fit, or it's not quite what they thought, and they send it back. So I think apart from equalising, I don't think it's fair that a 2% tax, which is £20 per £1,000 you take, should be put in place. I think this is another case where the government should take a more common sense view and try and be really fair and say, well, it's not equalised between the bricks and mortar businesses and the online businesses. It's a case of equalising between the big firms like Amazon and the small firms, like people that have just got everyday people that are now selling online, and it's just the business model that they're following. The big firms have got so many unfair advantages, and they've got so much more strength and power, and then a lot of them even manage to wrangle around paying VAT. So this 2% tax, it's just not the right way to do them. Tax the big firms more, but I don't think the government often want to tackle the big people because of the other repercussions that come from it. Although maybe if places like Amazon weren't allowed to sell their own products and just sold other people's products, maybe that would equalise the playing field. Maybe they should become the market organisers rather than the market stalls. And I think that might equalise the playing field a bit more as well. And on that note, that actually brings me on to what happens with the high street, because the high street it's awful what's happening, because you've got all these buildings and premises and sites that are being boarded up because, Debenhams might have been bought out, but it's only the name. So you've got I know in Manchester on Deansgate, you've got a lovely big building, and it's been there since way before I was born. Dead easily before 1980. The thing is, what do you do with them? And I think we're missing big opportunities. Because I look at Debenhams, I look at that premises, House of Fraser, and I think that building is beautiful, and it's massive, and it could be lots of different uses. You could have so many communities revigorated by turning into apartments, maybe a hotel, maybe the ground floor with lovely restaurants and food halls and more social meeting places. It can bring communities together a bit more. We don't need the high street just to be retail premises. It can be a mixture of everything. And I know I saw a picture of the Kellogg's site, I know the old Kellogg's buildings, and that's another one. It's like acres and acres of land and property that could be turned into a whole community with shops and cafes and meeting places and all these types of things. I mean, who wouldn't want to live in town, living in a building like Debenhams, where you might be on the 4th floor, but a few doors down, you've got a lovely restaurant on the ground floor. So this is what I do with these buildings. I'd say it's, instead of leaving them to be boarded up and sort of run by rats and security guards. I'm not saying security guards and rats are the same thing, but you know what I mean. You've got lovely buildings that could be put to better use. So I mean, at the end of the day, the internet is going to take care of your everyday grocery shopping. So the supermarkets, their sites can become mainly storage and distribution centres. But you know, a nice cheese shop, nice butchers, a nice cafe. You know, let normal people come with all the skills and talents they bring to your life, and let them cook for you. Let them show you handmade artwork or photography stuff, and you know, just like it used to be before the supermarkets came and before the internet. Let the internet take care of the routine stuff, and all these lovely buildings can be homes, hotels, and places to meet. That's just my thoughts on it. You know, I mean, just on that, I mean, even Home Bargains now are closing 49 stores. So all the while, there's going to be a lot more of these premises around that we need to do something with. By the way, those people that were expecting a job retention scheme, do you remember that the government was talking about giving us £1,000 per person that would continue to employ that had been on furlough? So we were supposed to get that money, being able to apply for it on the 15th. So that's been put forward because the government's attitude is that we've put forward the payment back until the end of March because they've extended the furlough time. So those thinking you're going to get a bit of a windfall in the middle of February, middle of this month, are now looking towards the end of March, probably the beginning of April, before we actually get anything. So don't worry, we'll get it in the end. Just before I go on to our let me talk about Sage, Xero, and QuickBooks. I don't know what experience you've had of QuickBooks and Xero and all these very, very good accounting and bookkeeping programs. I mean, they really are good. But I smile sometimes because I see these adverts on TV, and they're advertising QuickBooks, and I'm looking at, you know, someone making candles, or somebody making ornaments, or someone running a cafe, or a mechanic, and they're all smiling of how wonderful all these programs are, and they are good, but they're not that good. And even though I love them, I still have a whole team upstairs working on these programs. I mean, Xero and QuickBooks, I think we're one of the bigger partners in the Northwest, certainly, of using Xero. And we're actually, it's cheaper to subscribe to Xero through us and QuickBooks than it is to go to Xero or QuickBooks. So you come to us, it's cheaper. A lot of it's cheaper because we don't charge anyone, so you can't really compete with that. You know, so if you do want one of these programs, you want to operate it, just let me know. I'll sort it out for you, and I probably won't even charge you. Where we've got an issue is that people don't realise that whether it's on a computer program or an old manual ledger, it still takes time to do, and you've still got to learn the ways of the program. You still need to be able to have to set up your chart of accounts and your trial balance, and then know how to move things around. It is more time consuming than people think. And the bigger thing is, it's not just doing the number crunching, it's actually analysing the data. So you get all this data now. Numbers make patterns. I love numbers. I mean, and I know it sounds daft, but when you look through sheets of numbers, you can sometimes see patterns, and you see the reflection of life in those patterns. I mean, numbers are so. I don't need to go on about numbers, but I'll tell you now. I was my cousin's lives in the States, and he was telling me years ago that the IRS service out there actually have sort of like calculations of how often numbers like the number 7 and the number 11 and other prime numbers appear in everyday calculations, because apparently an expense is more likely to end in an even number than an odd number, and it's even less likely to end in a 7. So if they see lots of returns going in saying £9.77, £977, they're less likely to believe it than 975. So numbers tell stories. And I can tell you stories about your business just by looking at your accounts. And that's what you want. You want somebody to tell you what the numbers mean and what to do to act on it. So even though, I love these programs, I'm not sure whether you see some guy, servicing his car in a nice shiny overall, being really happy because he's got QuickBooks or Xero behind him sorting out his tax, because they really don't. It needs somebody that knows what they're doing to actually sort it out and give you the information you want. So it's not a plug for accountants. It's just that's why accountants are. If you think about it, if it was that good, there wouldn't be any accountants left. But we're getting busier and busier because of things like Xero, because people think, yeah, I've got it, but it means I've got to go and sign on, and I've got to do this, and I've still got to have the paperwork. I mean, I can. It's much easier for me to alert you to people paying late than it is for you to do it yourself. It's much easier for me to then tell you what to do about it and introduce you to maybe the right insurance or credit agencies or collection agencies that can help you even more, or even finance if that's what you need. So there's a much bigger picture. So I speak to our agents at these companies anyway, and they really are marketing to get their accountants to set these things up rather than the public to set these things up. So, I just thought I'd put that in because I think it's quite important. Just before I go into the questions, I know I'm always talking about Accounts Direct because we've been going for over 30 years and we've got clients all over the country, and at the end of the day, why do people refer their friends to us? And it's because they like their friends, but I'm not trying to plug us. I was looking at another thing that I think that where people are going to struggle, and it's in social media and general marketing. And I'm not sure if you know, but I've got a little side business. It's called BVTV, Beyond Vision Media, Beyond Vision TV Media, and we don't trade. It doesn't take any money. It's just our way of putting out some news, putting out some entertainment, keeping in touch with people. But we get quite good responses to what we do. I mean, every week we're getting hundreds and hundreds of people, maybe even thousands. I mean, I think we've got a direct following of over 20,000 people, and that's not including clients. And it's just generally out there in the media, and that's really without trying. And we're putting together lots of programs. I mean, we have a radio station facilities and equipment. We have a full TV in a box here. We can do anything. We've got some great skills going on because we've got real experts in the field, and we've got a new guy joining us now who's been in the TV business for many years, and I was just wondering if there's how we could do that to benefit everybody. So I know that publicity, I know that being out there is very useful to people, and I'm putting all sorts of programs together. I'd like you to get involved with me. I mean, we can go as far as saying that I've got a team of freelance journalists connected to me. We can interview you for the business. We can get you some videos. You can come on one of my shows. I'm not sat here I say it's not for the fun of it, but I do quite enjoy it. But I'm running an accountancy practice, and I've got lots of other things. So this does drain into my time. I'm not doing it just because I'm pushing my ego or I'm enjoying or loving it. I'm doing it because I want to invite you all, clients, non-clients, everybody who's got who runs their own business, to utilise my facilities and get involved with me. So like I say, if you want to get involved, I'll let you know how to get involved and how you can gain some free promotion and some free footage and content. I'm even thinking of extending the service to actually having people working for us who will actually help you with your social media. Obviously, you'll have to contribute to that bit, but these are all the things that are there right now that you can come and get involved with. So do contact me to get involved. And even if you want to appear on the radio show, or you want to appear on one of our, I do the Between the Spreadsheets review every week. Well, I do a couple a week, and you might have seen some of them. We have a bit of fun, and I've had some clients that said it's benefited them, but people seem to enjoy it. So do join our media side. There's lots that we can do, and it's just a bit of fun. Sometimes you've got to have a bit of fun. So let's see. David from Berkshire. I've unfortunately reached the point where I need to close my business down. What's the best way to proceed? I think it's always sad when people want to close a business down. To me, anyway, I'm getting a bit teary talking about it. But to close a business down, first of all, you've got to ask a few questions. What's the format of the business? Are you a limited company? Are you a sole trader? Are you a partnership? What's the format of the company? The second thing is, are you intending to reopen? Is this a pause? Do you owe any money? So if you don't owe any money, and you've got no liabilities, and it's a limited company, you can just apply for it to be struck off. It might be a good idea. I don't know if we act for you or not, but if you do, phone one of the accountants, and we'll put what they call cessation accounts in to show we've written accounts up to date, and then we file them, and HMRC can object if they don't like you having the company struck off. But it's a fairly simple procedure. You make the application. You can't apply for 3 months until from your last date of trade. So if your last date of trade is today, you can't apply for it to be struck off within 3 months, because the idea is you're not allowed to have any debt. So if you do have any debt, you could end up getting into trouble for trying to strike it off. But again, with all these things, I say, come and talk to me. If you're a sole trader and it's your own company, you've got no limited company, you just put in your last tax return, tell HMRC that you're not trading anymore, and that's it. If you've got any debts, you'll have to pay them off, or come to some agreement. It's as simple as that. It's all about whether you have a liability or whether you don't. Ian from Preston. Hello, Ian. We've been going for a year and business is improving. Very good. My wife and I are currently partners, but is there a better way to structure the business? Well, it all depends where you are, and it all depends what the level of trade is. It all depends on what you're trying to achieve. Mostly, I would always recommend that people in business trade using a limited company as a vehicle to trade. If for no other reason, there are a few reasons to do it. There's some tax advantages. There's some selling advantages. There are some advantages, but the main one is limited liability. So that basically means in a nutshell that if the company ran into trouble and had to be liquidated, any debts are the company debts and not your debts. So it gives you a certain amount of cover, not a license to get into debt, but it gives you some cover that as long as you trade properly, then you're not going to be stuck with debt for the rest of your life. There are other advantages. So I think definitely a limited company for me. But different people, different ideas. It also structures ownership better. So I know partners with husbands and wives. A lot of time, here's something to consider. Is it an actual partnership? Do you have a partnership agreement? Do you get separate tax returns from HMRC? And do you get a tax return for the partnership? Because a lot of husbands and wives think they're in a partnership because they're husbands and wives, but it's actually not a partnership. So just check with HMRC how you're registered. Because remember, if it's a two-person partnership, that's 3 tax returns. Susan from Warrington, how do I pay less VAT? Do you know, I get asked this all the time. But remember, VAT isn't taxed like a tax on your profits in the normal way that you make money and then you pay tax on it. It's effectively a tax on turnover, less things that you pay out. And there isn't really a way around it. It's maybe there is a limit before you have to register a turnover. I think it's about 85,000 at the moment. There are maybe sometimes, like I had this lady once working with a sister in one company, but really what they were doing is that they had upstairs with a separate entry where they were doing dog grooming, and downstairs they had a pet shop. So by decombining the turnover, they dropped beneath the tax threshold on both businesses. And it wasn't, it was like, the simple question is, are you actually partners? And they weren't. It's just because they were sisters and it was on the same premises. But one was a dog, the dog groomer, and the other one sold pet accessories and pet food. So, consider what your turnover's like and what your trade is like. But you know what? If you want to make money, you need to be turning over more than 85,000, especially if you're selling product. You can't be just trying to avoid paying tax, or trying to find ways of not paying tax is fine as long as it doesn't affect the goals you've got for life and the business. So there's no point reducing turnover, closing down. I mean, I've known people that have worked out if they close 2 days a week, their turnover will drop beneath the VAT threshold. And they thought that was a sensible thing to do. Not in my head, but, you do what you do. So there possibly are a couple of little tricks you can to pay less VAT, but my suggestion is don't get fixated with paying less VAT. Get fixated with growing that business, because eventually, whatever you do, you're going to be paying VAT, unfortunately, but such is life. So now we've got Jeremy from Suffolk, and I'm running out of time. Can I give staff shares in the company as a way of reducing tax? You certainly can. There's different ways of doing it. I mean, you can just give them a salary sacrifice where you reduce the amount of gross wages and you give them shares instead, but you can only give up to £3,600 a year. And you've got share incentive plans where they basically join a policy where you give them shares. It can be a bit complicated, and it's maybe not always the best way, especially if you've got a small business, but it's certainly something we can talk about if you give me more specific details. So somebody, I just noticed he was telling me the other day that he was building an office in his garden, and I'm saying, and he thinks he can claim the VAT back on the building of it, and he can get relief for working from this place. And you can do all of that, subject to certain circumstances. But just remember, if you do build onto your house and you're claiming tax relief or VAT relief on these premises, it will probably put that as a proportion of your house into a capital gains sale. So if your house is sold, then right now there's no tax on selling a house. But if it's then becomes, you've done this, you've built extra onto the house and claimed it as an expense, then you could end up paying capital gains on it, which could be a lot more than the money that you claim back. So I just thought I'd put that out there, and that's pretty much everything I've got to say. And if you do have any queries or anything that you want to talk to me about, do contact me, and please don't forget to subscribe to me on YouTube, because I like to see my followers going higher and higher, and besides that, you'll get alerted to the podcast that we give. Please do send me some questions to give me something to talk about and research, and if you do want to get involved with our media side, contact me straight away. Anyway, have a nice week, have a lovely week, and I'll see you next week as usual on Thursday at 7 o'clock. Good night.